Welcome back to another portfolio update video. There has been a lot going on in the stock market since I made my last one. We've had earnings come out, we've had an election, we've had rates get cut even more. We're also slowly heading into holiday season, and we've seen pretty much everything go up across the board. Today we're going to dive into my accounts, and I want to give you guys an update on how my portfolio has been performing. If you're new here, my name is Sheldon, and I make completely transparent videos talking about how I invest in the stock market. And I also want to mention that I am not an expert. I'm just some dude who's been investing in the market for about 5 years now and educating myself on it for a lot longer than that. And I just want to make videos sharing my experience, and hopefully we can build a community here of like-minded long-term investors, and we can all build our portfolios and learn together. So please consider subscribing if that sounds interesting to you. I'm going to call this the perfect storm coming together in the stock market right now because we recently had earnings come out. We're also headed into the fourth quarter of the year, which is the holiday season, so a lot of people are typically spending more money, and historically the stock market performs pretty well during the fourth quarter. We also had an election, and whatever your opinion was on that, the market did rally on a Trump win. So we had all these different things coming together, and we had interest rates come out. We definitely had, I think it was a 75 basis point change in the last few months. They dropped, so they're trying to stimulate the economy. They're trying to promote spending from the Federal Reserve. So we've just had all these things come out recently, and it's just all come together, and in the last week and 2 weeks, the market has just exploded as a result of it. So let's dive in and see how my account has been performing as a result of all of this, and it's definitely been a pretty crazy week for me. I've seen the biggest swing that I ever have in my account before, and at the beginning of the week, I started with around roughly $67,000 in the account, and now by the end of the week, we're currently sitting at $73,000, almost $74,000. I did contribute $1,000 into the account. I think it was before this week, though, so I think it was back here in last week, so it didn't even really account for any of the gains, and it's just sitting there in cash in the account. I haven't actually decided what I'm going to do with it, or I think I might actually start building up a little bit of a cash position. More on that later. But yeah, we're almost at 50% gain, total gain in the account now, up around $24,000. Definitely the craziest week that I've ever had in the market. And congratulations to anybody who was, positioned and invested in the market going into the last few weeks. Because everybody, doesn't even matter what your strategy would have been. You could have been invested in S&P 500 ETFs, even probably penny stocks. I actually don't know about that one. I haven't looked at penny stocks in a long time, but I'm guessing no matter what your strategy was, you definitely made a good amount of money and a good amount of gains in the last week. So, with all that being said, let's start to dive into some of my personal positions here. And so Palantir, this is the first one that I want to talk about. And I don't even really know what to keep saying about Palantir. We're up 600% on the stock now. It's just had a crazy run, to say the least, in the last year, 2 years. The stock is up around, 40% just this week. And you're going to see a lot of stock charts that look like this. If you're looking at the last week, because a lot of things just shot up. And if we pull up their earnings here, U.S. revenue grew 44% year over year. U.S. commercial revenue grew 54% year over year. U.S. government revenue grew 40%. Total revenue, so just internationally, was up 30% year over year to $726 million, which I believe they were expecting revenues last quarter for this quarter to come in at the high end of around $7 million. So I think they crushed that by around $25 million. So yeah, just, Palantir has continued to just crush it. I mean, look at that 1 year chart. Just insane. 5 years, it's been up 700%. I'm currently sitting up 60 or 600%, just over $8,000. I don't think I'm going to sell my Palantir shares, as long as they continue to come in and crush revenue growth numbers and, continue to be innovative. And unless anything fundamentally changes in the business, I can't see myself selling out of these shares. It's tempting because, They are sitting on a 300 PE ratio, which is a little insane. And, I'd probably, to be honest, I'm not buying into Palantir at this level. I'm just going to hold my position. But I do think it's pretty overvalued, to be honest. It's just had such a run. And it makes sense, though, because they've had such crazy growth numbers. These are the types of companies that do command a 300 PE ratio. But, it's a little uneasy feeling to be holding the biggest stock in my account that's so highly valued, right, with a 300 PE ratio. But I'm going to be watching it closely. I'm not selling, like I said, so we'll just continue to ride that one out, I guess, So to move on, Meta, I don't think too much news has really come out with Meta. They did come out with earnings. I won't be surprised if I see them coming in at around $600 in the next few weeks here. They're going into their big season. Holiday season for Meta is historically like a really good quarter for them because everybody starts to spend more money on advertising in the last quarter of the year for Christmas, Black Friday, over the holidays, things like that. Their revenue typically does have a spike. So Meta's about to make a lot of money. They own, I don't even know what percentage of the digital advertising market, and it's a crazy one though, and a large percent of their revenue comes from digital advertising, if not like almost 100% of it. So they're going into their good quarter coming up. Google, I know Google was dropping a little bit here. Let's pull up their stock chart. So they did have, Google had a little bit of fear get baked into the stock because of government regulations and some fears that the government was going to step in and break Google up. But they've had a little bit of a rally lately. And honestly, I think I said that I hate recommending buying stocks, but I did say that I thought Google was a buy when it was crashing, just to say that, and it's definitely come back because I just don't think any of these big tech companies are going to get broken up by the government anytime soon, to be honest. And now, especially because Trump won and his administration is in, they're not going to break up big tech. So I think Google, kind of just business continues as per usual for Google. They also would have come out with earnings like all these other big tech companies, but nothing crazy on Google. They did drop, but I think they're going to come back, and still, honestly, maybe not a bad time to buy Google shares. But yeah, currently sitting up 74% on my Google shares. Not selling, not buying. We're just going to keep riding that one out as well. Like a lot of these companies, I haven't actually bought or sold any new positions in the account in a long time. I'm positioned well. I'm positioned how I want to be. I think my latest stock that I bought was Caterpillar, and that was a little bit of a diversification play. So I haven't actually added any new shares or sold anything in a while. But to move on to Apple, we're currently sitting up 57%, and I know you guys love Apple, just like everybody. Kidding, obviously. I know a lot of people hate Apple stock, and there's a lot of just Apple haters in general. But I don't hate Apple. I actually really like Apple. Of course, the chart comes up as red as I say that. But in the last year, they've had 24%. They just recently announced that they're coming out with new MacBook Pros and a new Mac Mini. And you might catch me going to the Apple Store today after I record this. Not going to lie, because goddamn, that Mac Mini does look pretty sweet. And my editing setup here kind of needs a little bit of an upgrade soon, to be honest. So we'll see about that, but I'm a big Apple fan, obviously. I just really enjoy their products. I completely understand that there's a lot of people out there that don't, especially in the gaming community and, electronics community. It's just, Apple's very proprietary. But look at this, you can't hate on numbers, you can't hate on the data. And if we look at their quarterly financials that just got reported, revenue is up 6% again. Called it. I said I think that they're going to, get back to some revenue growth numbers, and they did in their latest quarter. I don't know what it was mainly fueled by, maybe services here, but if we look at their iPhone sales were kind of projected by a lot of people to continue to go down, and they pretty much stayed the same year over year, like a very small increase. I think there's a little dash here, so that means that it was an under 1% increase from 200 billion to 201 billion. So, not the craziest jump in iPhone sales, but there was, they stayed steady and grew a little bit and didn't decline, which is the main thing here. But total net sales is up around $10 billion, or a little bit less than 10, a little bit less than 10 billion, like $8 billion. And I'm just, like I said, an Apple fan. I think if we look at their total net income growth was really low, but I believe that was mainly due to a big income tax expense because it was the end of Apple's fourth quarter fiscal. So they actually came out with their full year report, which is where I got this information from. It's their annual 10K that got released because their fiscal year wrapped up. So, fourth quarter ended for Apple. I think they finished pretty strong. Like every other company, it's going into the holiday season, and I can see that benefiting Apple as well. And where we're currently sitting on our shares here, up 57%, 14 shares. Our average cost basis is $143. I think, I don't think Apple's going to be a huge growth stock. Like you can't expect Palantir growth numbers out of a company like Apple, but it's just such a steady company, and it has it's just such an established brand. And like, if we look at, let's just pull up the market cap of this bad boy, like $3.5 trillion. I think Nvidia actually topped Apple recently, but it's just such a big company, and I can't, like, their stock isn't going to crash crazy if the market does go down. So it's just a very stable play. It's a pretty safe play, and one that I want to keep in my portfolio for a while. All right, to move on to JP Morgan, and all of the US banks had a pretty crazy week this week. I currently have 12 shares at $143. Average cost basis, and that's almost the exact same cost basis or average cost that I have on Apple. I've never actually noticed that before, so that's kind of interesting. But anyway, we're up 64% on our shares, and get ready for this because they had an insane week. You don't normally see this from banks, but they had a 6% week, and I think there was one day that it opened up at like plus 10% in one day from JP Morgan, which is crazy. You don't see that very often with a lot of banks. And I think mainly it might be due because of the election. I didn't see much other crazy news come out for the banks, but, other than interest rates falling, if you look at something like Goldman Sachs as well, it's a pretty common trend just with banks over the last week. JP Morgan, the reason I hold it is, I do like to have exposure into the banking industry. And JP Morgan is just, pretty much your one of the best banks. You could hold Goldman Sachs as well. You could hold pretty much any other of the big banks. They're all very similar. But JP Morgan, I like Jamie Dimon. I've listened to a couple interviews from him, and I think he's a pretty level-headed CEO. So, not too much interesting there. If we keep going down the list here, Nike, poor Nike has just continued to get hammered, but I'm going to definitely sit on Nike for a while, not selling that. I don't think I'm going to build out my position anymore. I'm pretty comfortable with how big it is, and like, I'm ready for that stock to start going up, but, hopefully we get some good numbers come in through Q4. Hopefully people are buying each other Christmas presents that are, some Nike Christmas presents. MDA is a stock that I kind of want to touch on. It's just such a cool Canadian company. They're a space company. They build space electronics. They do satellite imaging. And they've had an absolutely insane run this year. Like just this year, they're up 120% on the year. And really no news. There's been not a lot of news come out for MDA. They've just continued to kind of silently report earnings and come in with some really good growth metrics. If we look at their year-over-year revenue growth, 21%, 34%, 25%. Trailing 12 month is a little bit down right now, but, if we look quarterly, I think they had, I'm not sure what happened in this quarter, but only 3% revenue growth. The space industry it is pretty cyclical, and it kind of depends on how the economy and how like the macroeconomic landscape is looking. But I mean, look at these revenue growth numbers: 57% in Q1 of 2023 for a space company. I mean, that's not a space company is not like a software company where the profit margins are huge. Your cost of goods sold is low. There's lots of expenses when it comes to a company like this, and they're really big and expensive on infrastructure and, state-of-the-art facilities for testing equipment that goes into space. I think I kind of want to do its own individual video on MDA because it really is a cool company, and it's a pretty small one too. It's a Canadian company, but it's only worth $3.14 billion. It's starting to get a little expensive, if I'm being honest. 68 PE ratio, that's starting to get a little pricey. But I mean, the market's we've been in a bull market for about 2 years now, right? So I do expect the market to pull back at some point, but if a lot of these companies continue to come in and just hit these revenue growth numbers and hit their expectation numbers, I can't really see what's going to fuel the market to crash. We need something to happen to really spark a crash in the market. And especially with interest rates coming down and, going into the fourth quarter, like I could see us riding out the rest of the year still in the green, and then maybe next year, we'll see what happens, but we could have a little bit of a pullback in the market. Like even Lemonade, this is a stock that's been just sitting in the bottom of my portfolio. At one point, I was down like almost over a 50% in the stock. This is one that I bought a long time ago and have kind of just held it because, I like the idea of the company, but the stock has been really struggling for a long time, and I'm almost break even on it now. Like Lemonade, I mean, yeah, I don't even know what to say about that. I might sell that one because I don't even really pay attention to the company that much anymore, and I want to be able to like allocate my focus to all the positions that I really do care about. But yeah, that's pretty much an update on a lot of it. I'm going to probably try and build up my cash position as much as I can in my account over the next, at least until the end of the year. Maybe you guys know I'm in school right now, so I can't really contribute much money into my account, if anything at all. And so, that's pretty much the update, though. That's my plan. If there's anything that you guys want me to talk about in these portfolio update videos, or if there's any other content you want me to make in general, let me know in the comments below. I'd be happy to do the research and create the content that you guys want. And if you got any value out of the video, please consider dropping a like and subscribing to the channel. As always, I wish you the best of luck on your investment journey. Peace.